Today's guest is Jan van Eck, the CEO of VanEck. It's a global investment manager that has been around for about 70 years and has just under $140 billion in assets under management. It's also an issuer of spot Bitcoin ETFs and spot Ethereum ETFs. Jan, you are our first guest in the podcast studio here at the Say office, so welcome onto the show.
Wow, it's great to be first.
Yeah. No pressure, none at all. We like to start off with asking our guests, what does crypto in America mean to you?
Well, a two-part answer. Crypto in America does mean the freedom, and it means the freedom to invest in Bitcoin would be my number one answer. And the reason, I have to give a little quick context. VanEck was, and my dad started the firm, was the first company to offer a gold ETF in 1968 when gold was fixed at $35 an ounce and had been fixed basically for the entirety of U.S. history. But what was interesting about that is it had to be a fund that invested in gold mining shares. Why? Because it was illegal for Americans to invest in gold in 1968. And as you recall, that peg became undone in 1971. And even for the next 20 years, the way you invested in gold was gold futures, right? Because there was no ETF. And then the gold bullion ETFs evolved. So I was nervous when I started getting excited about Bitcoin. I was always in the back of my mind, they could make this illegal, right? Mm-hmm. And so for me, happy as an ETF issuer, of course, then that was legalized in January of last year. It was a big seminal, I'll call it freedom moment. But we've always thought of the importance of portfolios to have the flexibility of investing in hedges against government spending. So that's what crypto in America means to me.
Yeah, that's really cool, actually. I just want to go back to what you said. Your dad was the first person to launch a gold ETF because it used to be illegal to be trading gold or in an ETF. And then similar to crypto, it was pretty much outlawed by the prior administrations, right? And then you also welcomed the birth of these crypto ETFs, Bitcoin ETF specifically. I mean, that's just such a cool comparison because people call Bitcoin digital gold, right? So yeah. Nice.
And it was banned. I mean, mining was banned in China, right? Yeah. So there's not it's not like there was some random risk. That was the biggest center for Bitcoin mining activity, and a testament to the flexibility of the design of Bitcoin, right? That you were able to shut off the largest mining segment in the world, and then the network adjusted.
How big is the gold ETF on VanEck?
So our gold bullion ETF, our gold share ETF is, something like 15 billion, and our gold bullion ETF is something like $1.5 billion.
You think the spot Bitcoin ETF will get to that?
It's coming up. Ours is coming up on 2 billion. Unfortunately, we had to launch the same day as some larger firms. So when they went down the alphabet, VanEck was at the bottom. But people remember our ticker symbol HODL.
It's a good one. It's a good one. Yeah,
we'll be a survivor.
Just want to touch up on that as well. You just mentioned you had to share the glory with a bunch of other ETF issuers, right? But you just sent a letter, first to file letter to the SEC. So for our listeners who are unfamiliar with this, what was that letter, the contents of it, and why did you send it?
I would say, I'm not whining. It's going to sound like a whine, but VanEck is like the number 2 victim of the way crypto regulation unfolded. The number 1 would be the Winklevi. I mean, they applied for a Bitcoin ETF, years before anyone else, right?
Like 2014 or something crazy like that.
No, I think earlier 2012, 2013 or something like that.
We got to create this, yeah.
Now I will say that custody solutions were not really ready for retail products back then. But still, the way everything has worked in regular U.S. financial regulatory history is the first issuer to file pretty much is the first one to get it approved by the regulators. And so they didn't get that. I think they also suffered a little bit unfairly during the kind of choke point stuff. So but we co-filed. We were the first ETF sponsor to file in 2017, and obviously, we probably would have had greater market share and liquidity, right, if we had launched first. But
yeah, I want to ask about that because you guys highlight basically global macro risk as sort of core investment criteria as part of your strategy at VanEck. And obviously, we've seen a dramatic shift over the last kind of 6 to 8 months in the regulatory environment here in the United States. You mentioned China, obviously banning mining, choke point. You've hit on a lot of the highlights already, just in terms of the struggles that the industry has faced. Have you guys always just been kind of full steam ahead, or how do these sort of political wind shifting affect your investment strategy at the firm?
Well, I guess the way I always look at our investment approach, as you said, is kind of macro, but let me explain what that means. It means that basically, people say, oh, markets are efficient. And it's like, well, if you take a step back and look at big political, economic, and technological trends, sometimes you want to tilt your portfolio. And so what I like to say in shorthand is show me a chart that has multiple decades on it. And if I see an extreme, that's going to show me either a risk or an opportunity. So that's kind of what I mean by macro. When I think about the time period since 2017, it's really this, underwriting the investment thesis that you should buy Bitcoin. And the way we interact with our clients is like, this is the way we see the world. We're not going to force, obviously we can't force people to do it. But what we do is offer sort of narrow solutions like a gold fund or a Bitcoin fund. And if you believe us and listen to our content, then hopefully we are persuasive. And so I'm just happy that, we were talking to investors and said $3,000 a token seems kind of cheap to us. And, it's going to maybe, it's a simple back of the envelope, become half the market value of gold. So that's like 400 range eventually. And then it'll be boring.
Yeah. That's a really simple kind of one-line thesis. Just half the market cap of gold. I mean, I think that's a pretty compelling argument.
Yeah. I mean, the other way to look at the last time period for us is how does a traditional financial institution get involved in crypto, right? So you read a white paper, and then it's, you apply for the TradFi wrappers for everything you can do in crypto. Okay, we've done that. But we wanted to get closer to the action, right? So we started investing in some venture funds. This year we launched our own venture fund. So we're directly interfacing with the software developers, like this office I'm in right now, right? And understanding what they're doing. And then building that team. I mean, you all are crypto kind of experts, but back then, no one had crypto on their resume, right? And it's just sort of funny. Some of the, I would call them stars that joined our team were people that were like spending all night on this stuff. I'd get their resume and be like, you're a distressed debt expert, or you're like an emerging market expert. And I'm like, no. I'm actually doing all this other stuff. So it took a while to build that team, right? And to build a track record for some of our funds.
Something that we were also told is that you have been working with the SEC for about 8 years, obviously not just crypto related, but across a bunch of different entities, right? And so like if anyone has seen the evolution of what's happening inside there, you're probably one of those top people, right?
Yeah, I went to law school as well, so studied securities law. I've been following the commission for a super long time. We had to start getting engaged more with the SEC when we started our ETF business 19 years ago. So in the early days, every ETF needed SEC approval. So you can imagine that was a lot of back and forth, and that's been more standardized. And that's why they're talking about doing a rule for crypto ETPs now as well, because the SEC staff does not want to be commenting on every, XRP leveraged product, right? So, I would say the SEC. It's interesting how the SEC's role is kind of diminished. I would say because if you look at stablecoin legislation, a lot of it's going to the OCC, right? They're not checking they're not doing the audits. And then if the sort of market structure bill passes, a lot of the authority is going to go to the CFTC, right? So it's in a way, I think institutionally, this is a whole separate podcast, but they were sort of so aggressive or incompetent or whatever word you want to use during the last 5-year stretch that the Capitol Hill has said no, stay in your lane, SEC.
Yeah. Do you want to get your take on that? There's been some delays actually that we've seen for some of the crypto ETF indexes that have been applied for. I believe it's Bitwise and Grayscale were approved by the SEC and then had a stay put on them by the commission until further notice. What's behind that, do you think?
I mean, I think they're trying to move to a system where there's a rule for crypto, and they want to slow things down. And frankly, some of these issues are very complicated, like staking for a Solana ETF. Staking means it becomes less liquid. ETFs are supposed to be liquid, so what percent can be staked? That's a new issue, and there's tax issues that are kind of boring. But they're grinding through those issues, and I think they're trying to be as fair as possible.
You think it's something that we'll see maybe move when market structure bill is approved, microstructure legislation.
Yeah, they kind of go hand in glove.
Yeah.
But again, I think the SEC is doing a lot of great work and thought leadership themselves, but I think they're looking for the Congress to set the guidance there before they get too far ahead of Congress.
Well, it seems like you guys also probably have a pretty intimate view on one of the changes that they're trying to propose for the SEC rulemaking, specifically on ETFs, right? So not to go straight into the weeds for listeners, and maybe you can expand on this a little bit, but my understanding is typically you're going with a 19B4 approval for an ETF filing. And now shout out to, we're a multi-coin portfolio company, and Greg Zathalis has been pretty instrumental in putting forward the GLS for the new ETF sort of process.
Yeah.
Do you think that that's going to be a dramatic sort of opening of the door? Because there are several requirements on like substantial float and things like that could actually complicate listings for some of the, like, let's call them the non-big three projects. How do you guys see that developing over time?
Yeah, I'm not intimately familiar with that kind of proposal, but yes, this two-step process of needing the 19B4, which is filed for by the exchange, not by the fund sponsor, kind of adds another level of complication and dynamics as people are rushing to get to market. But I would say that, VanEck is kind of sailing the other direction. And in the US, even though we have filed for a Salon ETF, we were first to file for a Salon ETF, but we're moving towards active funds. So our latest crypto ETF in the US is Node, which is actively managed, because when we talk to like TradFi investors, and frankly, even a lot of crypto investors, it's really hard to keep on top of all the projects. And if there are enough ETFs where you can get access to the underlying tokens, then that, I think, is a better solution. When we launched our Ethereum ETF last summer, I would say, and you may not like this question, but I said, if you don't know anything about Ethereum's market share, do not buy this ETF. But most people are like, what? But that's like a really important question. What's their economic model? What value will accrue to the token? Like these are foundational, right? And if the question, okay, maybe you could phrase it some other way, but if you can't answer that question in your own mind, you should not be investing, in a token, which is really just like an individual company.
Yeah, you have a lot of conversations with institutions, right, and people that may be crypto adjacent or not in crypto at all, right? And so when you're talking to these different asset allocators, managers, family offices, et cetera, what are they actually interested in? Is it more of like an index, or is it actually just, hey, spot Bitcoin? Kind of to your point about what you were talking about with the spot Ethereum ETF, like if they don't know about it, don't touch it. But what about everything else? I
mean, it's sort of like the whole institutional investor community became frozen in time after FTX. It's sort of like, there was 5,000 or something like venture funds doing crypto. Everyone had a crypto VC fund. And I think, the institutions that were there that were allocated, often crypto specific funds from like a well-established venture firm already, they were happy, and they ultimately had to hold, right? Because they had no liquidity, and they're very happy with their results at the end of the day. It became impossible to restart conversations really until this year, 2025. Now I think people they're just generally confused. Right? I mean, there's, crypto has all these different like eras to it, like the NFTs on Ethereum, and then the sort of whatever they're called, NFTs on Solana, right? And now Bitcoin treasury funds and Bitcoin miners, they're dead. No, they're alive. No, they're dead. Now they're AI, compute platforms. And so it's really hard to I think, so institutions really kind of don't know what to make of that. And also, there are just not that many, I would say, institutional quality money managers in the space beyond the VC funds.
You said they came back in 2025. Do you think that's because of the current administration or something else?
I think they're coming back. They're looking
maybe 2024 with the spot ETFs, though.
100% because of the administration.
Yeah,
but not just the administration. It's the whole backdrop. Right. And you guys have been interviewing guests, right? It's the fact that the technology industry came together, and it's bipartisan, right? All these foundational things. And it's frankly only now are the banks feeling okay to talk about it publicly, all the stuff that they've been doing, right? Yeah. And you saw the Goldman Bank of New York announcement. It's very exciting, but it's taken a while for that community to warm up again.
Yeah.
I don't know if you all have noticed this recently, but Avalanche has been on a roll. From FIFA launching their own Layer 1 on Avalanche, to VanEck unveiling the purpose-built fund to back ecosystem projects, the world is watching and building on Avalanche. Web3 gaming? Avalanche-based titles like MapleStory and Off the Grid have it covered. Finance? Avalanche has got that down pat too. Entertainment? Built for that as well. On top of that, starting in 2026, Sports Illustrated Stadium will be the first major sports venue to fully adopt blockchain ticketing powered by Avalanche. Backed by a strong network of builders and dedicated community, the momentum is accelerating on Avalanche for games, music, sports, finance, and more. Want to see how Avalanche is driving adoption? Go to avax.network and check it out.
Let's get to the Genius Act. Would you call that a watershed moment for not just the crypto industry, but also the TradFi, the banking industry?
Yeah, I mean, I think that the Stablecoin bill, the Genius Act, is one of the most important pieces of legislation in U.S. financial history. I would go back to FDR's Bank Act of 1933. I would go back to Alexander Hamilton. Why? Why do I say that? The whole financial system and payment system in the world is centered around bank accounts, right? My whole life, my bank account I have the same bank account I opened after college, right? Everything runs through it. It sends money to my brokerage account, everything. This Genius Act is basically saying you don't need to, what I call touch first base. You don't need to go through your bank. Yeah. You've got tech companies, you've got Facebook getting a green light, right? And then you have, kind of what I call Web 2 consumer companies like an Uber, the CEOs talking. They're huge, powerful, companies with millions of customers that can completely, compete against banks. And then so that's deregulation, like at a scale. I was trying to talk to someone over lunch. I don't even know an industry that's been so radically deregulated like that. And banks are fragile. The whole history of banking is we can't all go to a bank and get our money back because they're lending it and they're doing all kinds of stuff. So it's always a government needs to step in. Stable coins won't need government protection. They're kind of what people call narrow banks, right? There's always the T-bills. You want your money, you'll always be able to get your money. Right. And so I think potentially the whole relationship between the US government and the banking system will be different. Because if you have your money, if you have too much money in your bank account, like Silicon Valley Bank, instead of in stable coins, shame on you, right? Now, maybe it's not earning interest and you want to move that around, but I don't know, maybe I'm over glamifying, but I think it's really incredible. And the last thing, sorry, I have to throw in there that's genius about this is if you've been in the industry, this whole choke point thing, I mean, I can't wait to read the books that describe what happened through choke point, but weaponizing bank accounts really to ban an entire industry and banks. Because they're fragile, they need to be bailed out by the government. But even like the New York Bank, where Barney Frank was on the board, right? Yeah. The government used its power to kind of wipe out that bank, which is crazy. Yeah. So they will have a lot by enabling people, 51 now different ways of going around the choke point, right? Because you can go through any of the 50 states or the federal government to issue stable coins. So I think it'll be harder to do a choke point this time around.
Yeah, I'm curious.
Next time around.
Do you see that? Because I know you guys have written a bit about financial fragmentation. Do you see that sort of dispersion, right? Because one of the advantages of the US dollar over time has been this, I'll call it interoperability, right? The interoperability globally of the US dollar. But now, one of the best quotes I heard at DAS, and I've repeated this numerous times on the show, is we're going to see a USD A to Z. Right? Everybody becomes an issuer. Yep. Everybody's going to put a stable coin out there and have, what hopefully don't look like walled gardens, but what a dollar is a dollar, right? But a Disney dollar is a Starbucks dollar, I guess. Like, do you see that developing in a way that contributes or makes it more difficult for the consumer? Like from that perspective?
I think it's way easier for the consumer because they're not going to have to touch it. All this stuff, it's really can be behind the scenes. Like I'm hoping to use stable coins without ever having,
to transfer from one
money in my wallet. Yeah. Right? So I think that's one of the sorry, I've got all these different theories, but I think 2023 was a dramatic year for crypto in general. And I just basically say that because before that, doing stuff on blockchains, the cost was completely unpredictable and unreliable, right? the fact that the emergence of Solana and layer 2s and different blockchains that we know and love, right? That is now industrial strength for corporate America, and people can use it behind the scenes, and they don't need to know about it or worry about it. So I think that's really big, and I think now we're 2 years into it, and people will be able to kind of have the user experience its way friendlier.
Yeah, I have one quick follow-up question on that, which is you mentioned kind of the interest or the carve out for yield bearing, the treasury interest basically being directly passed on to the consumer, right, under Genius. And a lot of people speculated that was kind of maybe a bone for the commercial bank deposits, or trying to have some kind of a carve out where people can't just issue a stable and then pass that yield on, whether it's 2% of the 4% that they're earning or whatever. Do you see that as an advantage? Like, how do you see that developing in the market? Because we see a lot of these consortiums or places you need to now go stake or borrow against that US dollar to earn that yield. Like, how do you think that will develop?
I think that's actually a very strong and important part of the design of the bill and stable coins, because as you know, your audience is well aware, there's already the emergence of other kind of income products that are available either through DeFi or other means. I'll call it tokenized securities, and in my experience with having fixed income funds for my entire career, there's always this tendency towards wanting to go higher risk, higher reward to get market share, and to close that door on stable coins and say, like, that's payments. You want to do this other stuff, that's other stuff, I think is really important. So I hope that sticks. Just the other point is, to the question of whether this will be fragmented or not. I mean, I certainly have no idea, but there will be standardization and clearing houses and things like that I think fairly businesses will want.
Yeah.
Right. And that's where for some of us, like, this whole walled garden was kind of an evil place, right? But you do need, if you're a responsible firm, you're going to want to deal with firms that have an AML KYC process, and that's now stipulated right in the Genius Act as well. But I think that's also true for, just the viability of the stable. And no one wants to be running around checking 2,000 stable coins and whether they're accruing interest on their T-bills correctly, right? So.
What about the payments giants? We had a guest on recently who said he believes that the Genius Act passing and the mainstreaming of stablecoins could really threaten the Visas and the MasterCards of the world and this so-called duopoly that they've had on the consumer market for so long. Do you see that as an effect of mainstreaming stablecoins?
100%.
Yeah.
Yeah. I mean, that's part of why I think this is so historic is now, listen, they offer a lot of services as part of their fees, right? There is a lot of fraud. Whenever there's money, there's going to be fraud. So, that hasn't settled yet in the crypto ecosystem, right? I think we can all agree with that. But yeah, they're
do they become needless?
Their overall fees are in question, right?
Yeah.
And I think, listen, I'm not a payments expert, but there's a lot of these dynamics, which is going to the end consumer, right? That's an expensive, customer acquisition activity. So who captures the economic value of that, right? Why are they so valuable? Because they already have that network.
Yeah.
So, part of it is, are you willing to cannibalize your own business? And,
I'd say a lot of the partnerships, the PayPal, coming into the space, a lot of the payment companies seem to see the writing on the wall to some extent, right? Coinbase looking at Shopify. Like, I think there's plenty of players who will adapt somehow. It's going to be interesting.
Yeah.
What would you say is VanEck's kind of stablecoin strategy going forward now that we have Genius passed?
So we have two irons in the fire.
Tell us.
First of all, we manage the collateral for Agora. Which is a relatively new stable coin. And it's my son who started Agora. So full disclosure there. And then the corporate venture team at Circle joined VanEck last summer. And so we closed on our first corporate sort of venture fund at $40 million in the first quarter. So we've invested in a bunch of different software companies, right, that are taking part of the stablecoin evolution. And so we're very excited about that. A lot of the, I think, inefficiencies in payments are obviously not within the United States, but outside the United States. So I have to say, when I go back to work, it's usually like 60 to 80% of the thing is like, no, what's happening in Latin America is interesting or whatever. It's not like, yeah, I'm going to call Dara Khosrowshahi at Uber, right? I mean, someone will, but that's not where we see the immediate opportunity.
Yeah.
I did just want to go back to the crypto ETF fairness letter that you sent. Have you had a response from the SEC on that at all? No. Do you expect them to listen to that argument given the change in administration?
So just to clarify what we did, right? Yeah. So there are, I think, 3 Solana issuers, right? Yeah. Sponsors that are filed for ETFs.
Canary funds, I believe. And
Steve McClure.
Oh, yeah.
And, we had talked to other issuers, and it's not fair to little guys right now. I don't know if we're a little guy, but Steve's a littler than we are, arguably. He's a big man, but smart guy. But and so it's just sort of like, when can we get back to normal order, right? So the thinking at the commission last year was like, okay, we've been playing with this game forever, and we're not going to I'll keep it simple. The paperwork rules randomly let someone leapfrog someone else. We're just going to make them all go. And they thought that was the fairest thing to do. And what we're just saying is like, it's not random anymore. Let the first to file go first now. If we can get back to normal order. I'm not sure why they're not doing it with Solana, because they can do it. But I thought it was important just to articulate that view, and hopefully, we're leaning back towards that. And listen, kudos to some of my competitors that have come up with creative products and creative ways of converting trusts, and that's what a competitive market is about. That's what we're saying is don't let the commission kind of reorganize things.
You brought up the Solana ETF, and obviously VanEck has the spot Bitcoin ETF, the spot Ethereum ETF in effect. And then there is a filing for the Solana one, which I know the SEC acknowledged. And then there's also one for AVAX, as well as the on-chain economy ETF. Am I correct?
Yeah.
So when it comes to kind of the ones that you create, how do you think about why Solana, AVAX, on-chain economy one? Like, what is the internal process like? And then also, what do you think are the odds of the SEC actually issuing the Solana one, let's say by end of year?
Yeah. So we've issued, I think, 14 or so single token or multi-token ETPs in Europe. So we've actually been, I know it's off our radar screen, but way more aggressive there. And we started in 2022. And I think we're, one of the 3rd or 4th largest issuers in Europe. And our standards there are basically, I guess we were oriented towards layer 1s, right? I mean, again, I'm going back several years.
Sure,
the world has changed. And then sort of market cap. There are also, though, clearly regulatory issues that came in mind. So we looked, all right, has Coinbase listed the token? Kind of what's ongoing legal issues. So, so that would influence our thinking as well. Again, here in the US today, we may do some single token ETPs, but I really think that an actively managed kind of comprehensive approach is going to resonate with our TradFi clients a lot more. Yeah.
Bitcoin might sound complicated, but the Gemini credit card makes it simple. Use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. No annual fee, and right now you can grab a $200 Bitcoin intro bonus. It's the easiest way to start building your Bitcoin stash. Go to gemini.com/CIA to learn more. Terms apply.
Yeah, I'm curious just from that global perspective. I know, Europe, I guess historically has been ahead of the US a bit in terms of financial regulation, right? They had RFID chips before we did, for example, like just going way back. They seem to also be more receptive to futures and some of the options that are being put forth by the industry. Why do you think, just from your perspective, Europe has been maybe not more forward looking, but like seems to be ahead of the curve, just given that there's so many other innovations that they seem to lag behind us on?
Yeah, I think we might be leapfrogging them. So I think, to be fair, with their MiCA regulations and things like that, they did allow a lot of token, based investing. Not the UK. They were very cautious, but a lot of, if you look at tokenizing UCITS, which is European ETFs, a lot of the things that Mika requires is like a shadow of the existing system, like the same like DTCC, like settlements, ledger, like, yeah, you can do it on chain, but that doesn't really count. You gotta copy it. And I think, I mean, the SEC is really being radical and questioning that and saying, well, what's the point? If it's all transparent, if it's all visible to everyone, why do you need to kind of go with the old infrastructure? We'll see if we get there. So yes, a lot of credit to Europe, but we'll see what happens here, but we might be able to leapfrog them. And it does really limit the ecosystem, because we've looked at tokenizing some of our European ETFs because I don't know if you know this, but US withholds tax on non-US investors and US ETFs. So even though if they're huge and liquid, they'll trade internationally, European ETFs are more attractive. So we'll see. And, we've had a staked Solana ETP now for 2 years.
In Europe.
It works.
Yeah. It does work. Yeah.
To your point. So that's on your side of the ledger. Yeah.
We talked about, obviously, America, now Europe. What about Asia? That's a massive market. How do you guys look at it?
Yeah, I just spent 2 days with Chinese economists from Shanghai, and they're very excited about the stablecoin legislation. And they said there are 400 people have filed for this stablecoin license in Hong Kong. I think that, the amount of uptake in crypto in general out of Asia is huge. I mean, they're the biggest, right? If you look at Bybit, Binance, OKX, like the volume OKX, but like the number of customers they have. And someone was explaining it to me earlier this week. It's very simple. If you're a Chinese company, look, if you went to Hong Kong, any of us here, it would take us a month to 3 months just to get a bank account, which is crazy. If you're a Chinese company trying to get a bank account in the US or in Mexico, like places where you're doing business, forget it, right? So they all went to crypto. So there's this huge ecosystem out there, so it's really interesting what's happening. I just don't know where that's going to land, because it could land in the Mideast, right? Because ultimately there's a choke point, which is the regulator of stablecoins, and the Hong Kong government will be the choke point for stables out of Hong Kong, and they're related to the folks in Beijing. So I don't know how popular that's going to be. Relative to our system, which will have 51 choke points that all need to be shut out at the same time, right?
Quick question on the on-chain economy ETF. I know this is an actively managed ETF. For our listeners, can you just tell us the difference between active and passive, and why it's different for some of the crypto ETFs as opposed to the on-chain?
Yeah, it's very simple. So, a lot of crypto ETFs are just a single token, right? But if you normally invest in a passive ETF, it'll be a diversified basket of securities. So whether it's the S&P 500 or semiconductor companies, but you're generally driven by one or two simple rules, right? Market cap or whatever, to determine how much you should own of that. With an actively managed ETF, you can do whatever you want. So you can own 50. No, we can't own 50%. Well, you can, but you can. There are diversification requirements. But let's say you can easily own 25% Bitcoin, or you can own 0% Bitcoin. So it really allows you to be super flexible, and we've done it broadly so that we can invest in companies that we think might be revalued for anything that is crypto related. So I'm not advocating this, but as an example, there's a Japanese utility company selling at 5 times earnings, TEPCO, that is now kind of getting their nuclear plants started again, because that has now become a thing globally. And they may do Bitcoin mining, just like some other utilities. And so that's the thesis. It's part of the on-chain economy indirectly. It's an undervalued security. It's not something that someone would normally think of. But, and it also had the flexibility to invest in different blockchains, right? Because that's they all move in different cycles themselves, and not all are going to win.
Yeah. So you led me right to it. And in our notes, I literally just have question about treasury companies.
I'm like, Gerald has a question.
Just so everybody knows. But it's fascinating, like the public exposure to crypto assets, right? So I think tokenization of TradFi rails and that kind of thing has always been very interesting as a topic, but it seems like we're going to get TradFi exposure, to your point about wrappers, for crypto assets much faster than the NASDAQ is going to shift over and start running on say. But no, it is like I'm curious because obviously Michael Saylor did something unique where he really just kind of convinced his board to buy a bunch of Bitcoin, and it almost didn't work, and then it worked, and now it's working. It's being replicated sort of across the board, and that's very different than an ETF or an actively managed ETF, right? That's off the balance sheet. And then, he's got creative kind of debt and, convertible sort of issuance ways that he's able to continue buying. We had Soul Strategies, in Canada, basically capturing like validator revenue as a thesis and getting public market exposure to that.
Yeah.
And now you're seeing, I think, a ton of these strategies coming out. Obviously for Solana, there's been several. For Ethereum, I know there are several, and it seems like even all altcoins are getting out. Athena put something out recently. What is your thought on that kind of a strategy? Like, is all public market exposure good, or is that becoming a bubble? Like, what do you think of that sort of thesis?
Well, I'm jealous in a way, right? Because all these companies are raising money, and it is trendy. But we've been kind of conservative in a way as an ETF issuer over time. So, like BlackRock, we never issued leveraged or inverse ETFs on assets, mainly because it's like our dialogue with our customers is to try to set expectations. And when you say it's a 2X fund, but it doesn't perform anything like a 2X fund, I just feel like that's just not something that we have to do as an issuer. And so, that will lead to investor surprises, and that's not like a long-term strategy that we want to pursue.
Yeah.
So, treasury companies to me are just a closed-end fund, like a GBTC, that are trading at a premium because they're hot, or there's some kind of arbitrage, and then they can become stone cold, and then they're going to trade at a discount. Like, I don't see that. I don't see a world in which that doesn't happen. And so then what?
Yeah.
Then you liquidate the fund and give everyone their NAV back. Well, interestingly enough, companies rarely do that. So I think it's just it is really interesting. It was interesting for me to hear that, big buyers of strategy were offshore institutions that could buy equities but couldn't buy crypto. So he's tapped into, Michael Saylor's tapped into, real great inefficiencies in the markets. And like now our preferred ETF owned strategy, preferreds. And I'm like, what the hell's going on here? But I mean, it's been it's been good for him. I just think it's kind of not going to be sustainable for most people.
Have you bought any?
Well, indirectly through our ETFs, we have, and strategy, and Metaplanet. So we have, I told you, our actively managed ETF node, but we also have one that's index-based app. Yeah, and I mean that's insane how much Metaplanet we owned in that thing. Was it 5 times NAV?
Yeah.
I mean, I get the optionality value, but I just think at some point it trades at a discount.
What do you think of that constant sort of, it's not a flywheel, but like that game of positive versus under net assets, NAV, net asset value? Because I think one of the interesting things about GBTC, and I'm sure this was true for some of your products back in the day, was it was trading substantially below NAV. And it almost seemed like this very poorly kept secret where all you really had to do was do the math. And there is a volatility element of the underlying assets, right? That should factor into that math if you're an investor. But do you think is it just a constant rebalancing, or how do you play that game as an investor over time if you're looking at discount versus premium to NAV?
Yeah, I mean, it's if you can read the mood of the market, that's really what it is, right? That was post-FTX. It was uncertainty about ETF approval.
Right.
Everyone was getting liquidated. Choke points were happening. So, I will say that probably for every market like Japan and Metaplanet, there's a place for one, right? Because there are no Bitcoin ETFs in Japan. So, of course, people want to buy it. It can be an access vehicle.
Yeah.
Do investors flowing into treasury companies as sort of the new fad, does that threaten ETFs at all? Does that take away from?
I don't think so.
You don't think so? No.
No.
You're not worried?
It's just a big party, and there are more people at the party, and there's maybe, you don't know everyone at the party, and the party will end. That's how I kind of look at it.
Yeah.
Are the institutions that you speak to interested in them? Are they asking you about it?
there are all these different kinds of weird crypto institutions, right? There's whales, right? What are they? Individuals that have billions of dollars in crypto. There's foundations.
Yeah, how do we define this?
I think most, TradFi investors are staying far away. I don't even know if you said treasury company, I don't think they know what it is.
Yeah.
You'd have to define it
money market funds.
Just like you did. Yeah, exactly.
What's the appetite from wealth managers now? We are more than a year on from the Bitcoin spot ETF launch and literally a day over a year since the Ethereum spot ETFs launch. Is it much more of an appetite than early days? Is it?
Yeah, we did a survey of our private bank clients and our wealth clients, brokerage firms. And surprisingly, a lot of them still haven't approved it for solicitation.
Okay.
Right? I mean, sure, if a client calls up, they'll sell it to them, but for solicitation. So it's interesting how slowly that's gone, right? And even the big firms for their average clients. But, every bull market, it bumps the number up a little bit, so hopefully, we just hit all-time highs. Hopefully we'll have a good second half of the year. But to me, there's a dynamic in the wealth community where a lot of people don't know how to size their Bitcoin investment or any other investment. So they're relying on model portfolios, what's called model portfolios, where someone else determines how much of stuff you own. So we run model portfolios. Obviously, we own Bitcoin in our aggressive growth one and also in our just normal 60-40 one. And that's been a little bit tough last year, not for us, but because Bitcoin's correlation to the NASDAQ has been higher since 2020. If you're an allocator, you want something that performs, but also not, no one wanted more Qs at the end of last year, more Mag 7, right? So I think that also slowed down the adoption of Bitcoin in kind of the wealth channel.
I want to ask about a more illiquid part of the market. So you mentioned Circle Ventures, joining up VanEck Ventures. It's obviously very exciting. My background prior to crypto was in the sort of TradFi venture space. And when I came into the space, first of all, FDV was like a very interesting concept to me as an investor. And then also the notion of IRR, I think with like crypto venture portfolios is kind of unique, right? Because the time horizons, internal rate of return is like a time-based metric. And if you're talking about, a 7-year IPO versus like an 18-month token launch, those are just vastly different criteria for the deployment of capital in a very hot market right now. If you're deploying as a venture investor into these strategies, right? I know there's a ton of new venture capital funds that came out in 2021, deployed very quickly, maybe aren't raising a fund too. So how do you think about the way illiquid or like venture investors can kind of like react in this world? Yeah.
So we have frenemies within VanEck. So we've got the venture fund, but we also have a liquid token fund run by Pranav Kanade, and he's done a great job. And so he and I agree, really don't like the model of unlocking a small amount of tokens, having them ramp up, having the original investors dump on retail, and then getting out. I mean, what he will do with that is decry that phenomenon and then wait for the crash and then look at the user adoption relative to a much more sanely valued token, and that's how he makes his bread and butter. And he's done really well. Yeah, and I would say our venture people don't do that game either. So, I think that game is going away a little bit. Of course, you've had this dramatic news, right, this year with these legislative unlocks, and so the last month has been fantastic. Yeah, but we'll see. I think I'm a hopeless dreamer. I think investors will kind of come to their senses over time. Yeah. But I probably just wasted my breath on that. Yeah.
No, that's great. Yeah.
That should be addressed in clarity too, right? Sort of the notion around, token lockups and how long founders can hold before they sell and all that kind of stuff.
Advocating for that safe harbor. I don't even know how it's going to turn out. That yes, founders have to be locked for 2 years. Yeah. Because this idea of you do a project 3 months later you're flipping your tokens I really think that's really not necessary in our financial markets.
Yeah.
or it shouldn't get a green light from the SEC.
Yeah. Well, and it's got to lead to like lower quality innovation, right? I mean, if it's, you gotta stick around for a little while. So at least see if you can build something.
100%. Yeah.
Tell that to the traders. I feel like there has been a lot of progression on the regulatory front in the US, as we've talked about on the show a lot and as you've seen. But what are some of the things that you're still concerned about going forward on the crypto front?
I mean, we can't underestimate the importance of the market structure bill. I mean, to get a piece of legislation with bipartisan approval, it's almost impossible to undo that. Right? Mm-hmm. You can always lose an election, have a new SEC chair, and change the rulemaking at the SEC and the enforcement practices, and suddenly you're back to choke point, whatever we're at, right? 4.0. Yeah. So, this legislation is super important. But I think the amount of dynamism, competition that'll come just from that stablecoin bill is dramatic, right? So I think from market structure, it'll make software companies spend a lot less money on lawyers, which is a great thing, and it'll make it sort of a permanent, I think, innovation center for the United States, which is also great for New York City. But so it's important. But fingers crossed. I was really worried. I thought that the risks, if you will, to the stablecoin bill were much greater. I just can't believe the bank lobbyists allowed this to go through. And I guess literally a week ago, there was a lot of
kicking
late
and
night.
Screaming.
I was going to say
kicking and screaming. Yeah.
It's just I'm just still shaking my head.
Yeah.
Obviously, spot Bitcoin ETFs have brought in a massive amount of inflows. Ether's doing really well. I think 43% up in the last 2 weeks. According to your VanEck Bitcoin chain check, which I checked today, pulled in a record 2.2 billion during crypto week, which is pretty awesome.
Yeah.
I guess apart from that, not bad. Yeah, it's more than I make. What do you think will bring on the next wave of adoption aside from these, sort of the big token ETFs, maybe the crypto index ETFs, and aside from stablecoins, because I feel like we talk about stablecoins bringing in the next wave of adoption. Is there anything else that you're watching that you think will be like, aha, that will be an unlock?
Well, look, I'm a TradFi investor, right? So this is earnings season, and what we'll be looking at over the next several quarters and years is what companies' margins are being affected. Like who's cutting costs by adopting stablecoins? And it's not going to be the next quarter. That's going to take a year.
Right.
But it's the same way we're looking at AI now, right? Like these companies like Microsoft. Can Microsoft really not increase its employee headcount ever again because of AI efficiencies and keep growing its top line? I mean, the implications for large companies, if they're able to do that, is incredible for their valuations, right? Because their valuations will go up and their profits will go up.
Yeah.
So anyway, so that's what what we'll be doing is looking at stablecoins. And stablecoins, like all these things, become boring over time, right? But I think relative to AI, may be boring, and again, more because it's more B2B. Is my point, right? It'll be behind the scenes. We'll be following it, right, in the industry, and it'll be exciting for us if some of our projects work. But I think for the average, retail investor, they won't care as much.
I have one more kind of fun, ridiculous question as we move towards the end of our time here, and it's been great. But just coming from the gold background, there was sort of a very famous kind of algorithmic stablecoin that collapsed that obviously wasn't backed by gold or any other asset. It was just by another token. I've seen a lot of projects sort of revisiting. It feels like time is a flat circle in some ways, right? Or memory is short. There are projects out there who are thinking that if you could do basically an algorithmic like RWA, whether it's oil or gold or any other asset like that, a traditional commodity, that you could actually produce, let's call it a petrodollar for sake of argument. Do you think, I don't even know if it would work within the realm of genius, but do you think a product like that could survive, or do you think it would face the same kind of problems that, all sort of algorithmic stables?
You're talking about Terra Luna, right?
I am. I didn't want to, invoke the
emotion.
Yeah. But yeah.
Well, obviously we've looked at tokenized assets and continue to. And we have a tokenized treasury bill that's sort of like a BIDL. It's called V-bill. So we're definitely in the space. I think for most commodity related things, the problem is just the costs are expensive. Like even for a tokenized gold product, the storage costs, which aren't that much, something like 10 or 20 basis points a year, there's just not a lot of room if you're trying to track the price. And how do you charge fees? If they charge fees and they become securities and all this other kind of nonsense. So it's, I don't see a magic bullet there, but I think there will be a lot of innovation in the income-oriented space like we were talking about. And I mean, we haven't even talked about this, but like a lot of finance has the ability to get kind of re-engineered, right? Goldman was talking about that and Bank of New York. So,
Jan, we've covered a lot of ground in this episode, and VanEck is not just limited to crypto, but across the board, across a bunch of different assets. So you can answer this question however you like. But to wrap things up, we always like to ask, what else are you watching in DC or America that you think other people should pay attention to?
I guess big picture, super big picture, I think people are missing kind of the emergence of India as the fourth major consumer market in the world. In 10 years, it's supposed to be the size of mainland Europe. So it would be US, Europe, China, and India. So that's one thing. I guess I always want to make sure that there's not something wrong with that thesis. But otherwise, obviously, AI and like what we're talking about, how it's impacting corporate earnings, I think will be really, really interesting to watch and important for the markets.
For sure. We'll keep an eye on that. Yeah, amazing. Thank you so much for coming on today.
Thanks for having me on. This is a great pod, by the way.
Thank you.
Thanks for your time.
Sure.